to another episode of Futr Included podcast. My name is Richard Cummins, and I speak to people that are in the influential space of tech and thinking about the future of technology and what the implications might be, positive or negative. Today, I'm joined by Toyosi. I'm going to learn about his journey into venture and all the things that's got him to this stage and how he sees the industry evolving. Welcome to the podcast, Toyosi.
Thanks for having me, Richard.
Good to see you here. I've literally just been on the Black Tech Fest floor. Didn't know you was going to be here. This is pretty unarranged, but we're here having the same conversations that we would have had anyway.
Absolutely.
But yeah, it'd be good to introduce yourself for the audience. Let them know who you are, what your background is, and how you got to the point of today at Ascension.
Absolutely. Hi, everyone. So I'm Toyosi Ogedengbe, early stage VC at Ascension Ventures. Ascension is a pre-seed and seed fund backing UK tech companies. Career has been split into two, generally speaking. So I actually studied engineering. Post-engineering, I then went into management consulting for a bit. And then after doing strategy and ops as a management consultant, I then actually jumped into tech. My career in tech is split into two as well. So I started off as a founder for a couple of years. Then I was very fortunate to go to business school and then pivoted into venture. I've worked for 3 different funds at different stages. So first one's Bessemer, large multi-stage fund based out of the US. Second one is Speedinvest, HQ'd in Austria. Yeah. I was sitting in the marketplaces and consumer team, was there for 2 years, and then left Q1 last year and then joined Ascension in June.
Right.
But yeah, that's me.
Well, welcome, and it's good to hear about your background. I think a lot of our audience is going to want to know about the prior to the pivot, right? A lot of people are thinking about getting into venture. They don't know about the roots. There's a lot of conversations that we have around that. How was your experience in Eng, consulting, and also in tech influenced? And did you actually see this path as well at that point? Or what stage was it that you kind of like saw this opening into venture? Was it something that you always wanted to do?
So it's a good question. To be honest, it's not as sexy a story as you would imagine. I basically made an angel investment many years ago, probably like 10 years ago now, into an early stage clean tech company doing stuff in Africa.
And what year was this?
This was 2014. Nice. Okay. I really enjoyed the process, really enjoyed meeting entrepreneurs, like helping them think through strategy, pricing, etc. I actually helped them, or I was trying to help them anyway, go into new markets. Yeah. So kind of like a corporate development role. And I was still a management consultant at the time. And I thought, you know what, this is great. I love this. I wonder if I could get a job where I'm just investing in companies all day long. Obviously, at the time, I was doing it with my own money. And I was like, well, I clearly don't have enough money to do this, long term, although that's the goal, by the way. And so that was kind of where the idea of me going into private investing came about. And then I basically tried to get in. I didn't get in, and everybody kept asking me, "Oh, would you consider an MBA? Would you consider an MBA?" It's interesting because I did want to do an MBA, but I didn't feel like I needed to do an MBA to get into venture or private investing. Fast forward a few years, I then realized that, okay, this is clearly not happening unless I have some sort of story. I then founded this company that was essentially doing what I was doing, except I didn't have the money. So my company was called Speedinvest, and it was basically connecting tech companies in Africa to private institutional investors, which is basically venture, except that I was using the private investors to do the investing. But it was a path, it was a route, it was a means to an end.
So there's a lot in there. You just literally captured, I don't know, about a decade's worth of experience just in there. Yes. Let's talk about that 2014 investment. Yes. How did it happen? How did it come to you? I think that's a lot of the conversation actually we're having here today at Black Tech Fest. We were just on a panel, and a lot of the audience that want to invest, deal sourcing, like how did that initial 2014 investment come to you? And what prior knowledge did you have of angel investing prior to that as well?
Yeah, no, so it's a good question again. You know what? I say investing generally. A lot of people in the industry, irrespective of whether you're black or not, treat investing like a transaction. Okay. I kind of go the other way, and I treat it as relational. And actually, I would argue that probably the greatest investments are driven by relationships rather than transactional, almost like a transactional engagement. I say all of this because the investment I made was into a friend's company. So I basically, his name's Peter, company's called Mandalis Energy. Peter and I went to A-levels together. We went to university together. And then he basically told me one day that, oh, you know, I've moved back to Uganda. I ran a company. I've now left that company, but I'm now building this thing. And I was like, oh, hang on. So you're going to be making money while doing good, because it basically turns agricultural waste into electricity. Yeah. So from a farmer's point of view, you're basically giving farmers more money for things that they normally just burn. Yeah. You're then using this byproduct to produce electricity. And you know, anybody that knows Africa knows that we don't have 24/7 electricity. So you're basically adding more power to the grid. Yeah. And then the other bit is on the outside, post burning this thing, you basically get smokeless firewood, which is cleaner, cheaper, and burns longer. So I was like, well, if I can invest, make money, and do good, amazing. And literally, to answer the question, because I knew Peter, because of that relationship, it's trust. And because I trusted him, I basically invested in his company.
So the power of the network, you knew someone, and that was an organic kind of like investment, right? And it opened up your world to angel investing or venture capital as well, and like how you could transaction or build that relationship and actually invest in something you care about, right? Exactly. So now fast forward, based on that experience, you thought, okay, you're going to create a vehicle or a mechanism by which you connect tech employees to those startups. At what point did you decide to do that, and how was that experience?
Yeah, so to be clear, it was actually to connect the tech companies to money. Okay. So I'm based in the UK. Because of that angel investing experience, I started attending things like Angel's Den and there's another pitching event thing where you kind of meet loads of entrepreneurs and you're an angel investor. I'd only done one investment. But what that did was it basically opened me up to this world of other investors, one, but also other companies. And then I started to refine what everybody calls a thesis. Like, what do I believe in companies? What do I believe in a market? How do I look at the world, and so on? And so when I did that, when we founded AFI, we were like, well, we have the network in the UK. We're connected to all these investors. We've been fortunate to be in the positions that we are, in the industries that we are, and rub minds with those who have money. How about we act as a conduit to then channel the money into companies that need the money? And at the time, and still, tech in Africa was growing, is growing. There are lots of talent who were moving back from the diaspora to go and build companies in and across the continent. And we were like, well, these investors don't understand the cultural and the contextual environment. We do, because we're Africans. And so essentially we were a marketplace to make that happen. But that basically, and if you think about it, and we'll talk about it in a second, venture, if you are an investor, you have to be the bridge to enable people to see why you like a company. You're the champion, right? So in a way, there are a lot of parallels between the two worlds. So that's basically how I ended up.
So this podcast is, Futr Included, is all about technology, right? When you set up that marketplace, explain what the mechanism. Did you have a platform? Were you charging carry? How was you making money? And what tools and services were facilitating those transactions to take place within the marketplace? Because it's conversation. Back in the day, there wasn't as many platforms out there as there are now, Odin, etc., that facilitate that, easily to spin up an SPV, etc. Like, what were you using back then? Spreadsheets?
It's a really good question, and the answer is yes. We were using spreadsheets. So I always say to founders, the reality is, to do an MVP, it doesn't cost very much. Exactly. Like, you need to prove that people want whatever it is you're trying to build, but you want to do that with limited. Well, you have to, especially as a black founder, you have to do it with limited resources, just because we don't get money like our Caucasian counterparts. That's just the reality. So then the question is, how do you do what you're trying to do on a shoestring budget? So we did Excel spreadsheets. We would, in fact, the hack was, companies, in a marketplace, there's always two sides, minimum two sides. One side is usually the easier side. The easier side for us is obviously the companies, because they're looking for money. So we would go to accelerators and incubators on the continent, sign up their whole cohort, and then we're like, okay, based on this cohort, we will do our own internal analysis of which ones we think are good. And then on the other side, we'll then build relationships with all these investors. And we're like, listen, we've been to X institution, we've worked at X, where this and where that. And we understand the continent. By the way, this is how much money is going into the continent at the moment. This company has raised, that company has raised. This is doing the Stripe of Africa, and so on and so forth. And so investors, it piques their interest. And then, to answer the question on revenue, we basically didn't make any money unless a transaction happened. Sure. But actually, it was a double-edged sword, because if you think about it, the minute the investor and the company are connected, there is no way to really track the transaction, because this happened because there is no platform.
There's no platform, right?
Yeah. So it's literally me checking in with the company or me catching up with the investor, and I'm like, okay, a transaction's about to happen. And then once it happens, obviously we had agreements in place with the companies, but at the end of the day, if we can't track a transaction, we don't get paid. So yeah, it was interesting. I mean, needless to say, the company, it didn't actually work in the end. Company has since pivoted into like an advisory boutique. I'm no longer involved, but my co-founder runs this full time out of Nairobi.
Incredible. I didn't know about that part and journey of your story. Now I know about AFI. Let's move to modern day. Ascension. Explain to the audience what you're doing there within that VC firm.
Cool. So at Ascension, we were usually the first check into early stage tech companies. We are, however, restricted by the whole tax efficient thing, so SEIS and EIS. And so, to be perfectly transparent, it sometimes makes my job a little bit more challenging, just because there are a couple more hoops that founders need to jump through, getting SEIS advanced assurance, ensuring that they haven't passed the threshold, ensuring that the round can close, because I basically have a 1-year window to do a bunch of deals, and the deals have to close. If they don't close, essentially, the people who give us money, we have to return the money, which means they don't get their tax rebates, which is a whole problem. And so I'm kind of like moving a few pieces in order to make it work.
We try and demystify, and we're not acronym on this pod. So, Enterprise Investment Scheme. Just explain, just very quickly for the audience and what it is.
So, oh my goodness, I feel like SEIS is it Seed Enterprise Investment?
Yeah.
Okay, or maybe Startup. I don't know what the S. I'm not sure what the S stands for, but it's either Startup or Seed Enterprise Investment Scheme. All it means is that you, as a company, you basically need to fulfill certain criteria. Most new companies will fulfill the criteria, FYI. Super easy. You can go online and Google, but essentially it means that people who are high income earners can invest in your company in exchange for a tax rebate on their income. That's all it is. So from a company perspective or from a founder perspective, you can get that pretty easily. It probably takes 2 weeks to get. There's some criteria. It's quite transparent online. But from an investor perspective, look at it as individual investor or high net worth. The benefit for whoever who doesn't know is you get a rebate on your income tax, which is positive. And I think there's no capital gains tax, and there are a whole bunch of stuff. But it's good. It's a positive thing.
Carry on with Ascension.
Yes. So at Ascension, and I'll take a step back, because what I do at Ascension versus what Ascension is slightly different. So Ascension in general, we're basically split into two. There's a theme here, clearly splitting into two. There's an impact fund, which focuses on anything that improves the income, reduces the cost, or improves access to basic goods and services. So think energy, financial services, health, for the bottom 50% of households in the UK and Europe. That's the impact fund's focus. My focus is all tax efficient, so SEIS, EIS. It's usually first check. I'm a generalist, so I invest in anything and everything that I understand. So I don't do crypto, I don't do blockchain, I don't do Web3, but I do fintech, health tech, sustainability, B2B SaaS, marketplaces, and so on. Check sizes for me range from 150K all the way up to 250. We like to lead or co-lead if we can. If we can't, we're happy to participate. Do between 8 and 10 deals a year. And so if you think about that, given that we see probably 2,000 companies a year, it's quite a very small percentage. So the bar is high. Yeah. We like to try and believe that we're doing, or we like to try and do high conviction, but low volume deals.
Okay, brilliant. And just in terms of like tech tools and services, what supports you in your everyday to-day job? Like what tools or services like do you use at Ascension? So for example, when you're doing your due diligence on startups, are there any like platforms that you can recommend to the audience that you might be using?
Yes. So on deal sourcing, we basically manage all our deals through Airtable.
Sure, Airtable, yeah.
Airtable mainly. In terms of due diligence, so what does due diligence actually entail? Looking at product, looking at the market, looking at competition. OpenAI is a great tool for doing research, but also I think platforms like Traction with a CXN on the end, Crunchbase as well, PitchBook sometimes, and then Dealroom is really good as well, and that's for competitor analysis. Market analysis, Statista is also generally very good. But a lot of it is desktop research. Yeah. But also because we've got, Ascension has 175 portfolio companies. So if I'm looking at something in, let's say, the payment space, I can go to one of my portfolio companies that understands that space. We also have venture partners, actually, who specialize in certain things, whether it's logistics, in construction, and so on. And so we basically, and back to what you were alluding to earlier, we basically tap the network in order to even diligence companies. And so, there's this whole conversation around, warm intros, no warm intros. Personally, I think it should always be a warm intro because remember what I was saying at the beginning about trust and why I did the investment at Mandalis? Literally, trust trumps everything. The reason why you would look at a deal, I would argue, if it came from me, is because you have a certain view of me and a certain standard of me. And in a way, it's almost like self-filtering because if I send you a rubbish deal, you're not gonna look at any deal I send after that, right? Yeah. So
credibility,
it's credibility. So that's
consistency as well, for sure. 100%. Great, amazing to hear about your journey, how you got to Ascension. Obviously, people can find you. Where can they find you online or?
Yeah, they can find me on Twitter at the Black VC.
Are you focused just on VC topics, or are you rambling about sport and all the other?
I don't actually. To be honest, my Twitter game is not on. Okay. It's not on point, to be honest. LinkedIn is the other one. But LinkedIn can get busy sometimes. I try and respond to most messages. I think if there's a connection between me and whoever, then I will respond. If there isn't, then I'm like, I can't respond to everybody.
So if you're trying to reach out to Toyosi, try and make that inroad, however you can make it to get through to him. But thanks for coming on the Future Included podcast. Really appreciate it.
Thanks for having me.
Hopefully we speak to you soon.
Yeah, for sure. Thanks, Richard.
Cheers.